Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by Bull Realty. For customized asset and occupancy solutions, give me a call or visit bullrealty.com. Today we're talking about crowdfunding, and what a great topic, because it seems like it's been around for a while, but what's been going on? Please welcome my next guest. It's Adam Kaufman. He is co-founder and COO of ArborCrowd, and he's joined us in Studio One. Adam, thanks for being here, sir.
Michael, thanks for having me.
We appreciate it. And I think some people think of crowdfunding and they may think of it as a little more one-dimensional, but there's really kind of some various different types of platforms out there, right? Can you kind of explain to us what, how many different platforms there are and basically how they're different?
Yeah, so there's an abundance of platforms out there, and a few of them are quality, but most of them operate under one of two models. Either they find individual deals and allow investors, accredited investors at that, to come in to invest in those individual deals, or they operate under more of a fund model, where they raise the money up front and then they go source the deals, and that they can offer to non-accredited investors as well.
Okay. Yeah, and that's interesting. So the people can go into a blind pool and go into maybe smaller amounts of money. They don't have to prove that they're accredited in those, right?
Yeah, and I mean, their minimum investment amounts can be as low as $1,000 or $5,000, and they are aggregated into a blind pool.
Yeah, so I've heard one guy say that some of those investors in those size deals may spray and pray. And just put money everywhere.
I think it's fair to say that. And I think it's also fair to say that the amount of work that you have to do for the $1,000 guy or the $5,000 guy is just as much as you have to do for the accredited investor who may be coming in at $25,000 or even $50,000, because the dollar is all relative to the person, right? Right. So it's a more costly one.
Yeah, that's interesting. Well, and crowdfunding's been around for a while. And you've been doing it for a while. What's going on? What changes do you see kind of occurring? Has there been some of these companies that kind of have folded, shut their doors?
Yes, so one of the major ones closed their doors out of nowhere.
Which one was that?
That was Realty Shares. Okay. They closed about a year ago, maybe a little bit more. And I think it's the first of a lot of transition that we're about to see in this industry. You have to remember, crowdfunding's been around since 2013, really, with the passage of the Jobs Act. It's only been around an up cycle. Yeah. It's never experienced a downturn, and that is a proposition that I think we can all agree is in the not too far future.
Yeah, it's interesting that you mentioned that, because I've been thinking about that for a while. Crowdfunding's only been here when the market's been good. Property types have gone up in value, performance has been strong, and all the indicators are still really good, really strong. Things are still doing well, but everyone is a little concerned about the cycle being kind of long in the tooth, and that things eventually are going to not be as great, at least. So what happens then? What could happen then to kind of the view of crowdfunding if some of those companies and deals go south?
So listen, I've been advocating for this for a while now, and it will continue to be something that I push for coming into this year, because I think this year is going to be the year of change. A lot of the platforms out there will either go out of business, or there will be a major consolidation in the industry as a whole. Why?
Why?
The whole industry, I'm asking myself, the whole industry, right, was created in an upcycle, like I said before. It was created primarily by technology companies as well, who lacked the fundamental real estate experience to really bring in the quality deals. So for us, for example, we're part of the Arbor family of companies. We share leadership. Arbor Realty Trust is a leading publicly traded mortgage REIT in the country. We have a built-in pipeline. We have quality sponsors, people we've been doing business with for years and years and years, to access quality deals with experienced leadership on the real estate side. These platforms, they're backed by venture capital firms. Venture capital firms need to see constant growth. They need to see more customers, more investors, and more deals on the platform to drive investors, more dollars invested. And we're in a market right now where finding quality deals with solid returns is a hard thing to come by. Anybody with any level of experience
Yeah, but some of these crowdfunding companies, they've got to keep the deal flow, right?
They've got to keep the deal flow because the deal flow keeps the doors open, the money coming in from the VC companies.
Right, that's interesting. So it seems like, you know, when you look at this history of commercial real estate, crowdfunding's kind of rather new. And you were tell us a little bit more, you were telling me earlier about the real estate departments of some of the major schools having you on to kind of talk about, and they're learning really about crowdfunding. And how does that work, and what do they say? What do they respond to? How do they respond to it?
So that's actually my favorite part of the job, is being able to go to universities and MBA programs around the country and talk about crowdfunding. And it varies. I've spoken at the MBA program at Columbia to a class where they've studied one of our deals, decided if they'd invest or not. I came in and lectured and spoke about it. That introduction into the curriculum is a major milestone for this industry and shows how permanent it will be, and that's something that's important. We've done a lecture series now at the Harvard Graduate School program, where similarly we talk about how technology is emerging in the space of real estate, a traditionally very old school space, right? And what that looks like today and what that will look like in the future. Being part of these curriculums is important, I think, for the longevity, and we've been fortunate where NYU, the Shack Institute of Real Estate, has just done a case study on ArborCrowd, talking about the company and the industry as a whole. And I think that's the level of promotion that's great for the industry, as long as you're doing so in a good manner.
Yeah. Did you meet Hugh Kelly there when you were doing that?
I did not.
I did not. Okay. Yeah. All right. Well, what kind of tips would you leave? When you're not getting away from me yet, but what kind of tips would you give, a sponsor when they're thinking about crowdfunding?
I think you have to think about crowdfunding in legitimate terms, know who the platform is. It is not just a cheap source of capital. That is not the way that the platform should be working and the platform that you should be seeking out for. At the end of the day, you want to make sure the platform is set up well. They have gone through extensive legal framework to create the company. It's a new space, a new industry. It's a little bit of the Wild West. How legitimate are they? How did they set themselves up so that when things do turn, right, will they have issues? Will they go out of business?
Yeah.
What happens then?
Yeah, it's interesting. Well, I like the fact that you have some of the leadership involved in your company that's also at ArborCrowd REIT, because, or it's not called Arbor, it's called Arbor Realty Trust, right? Because you think about underwriters who are underwriting from the lender side, they're usually the most conservative. It's like, people ask, well, what was the cap rate? Well, whose cap rate do you want? The listing broker, the selling broker? You want the sellers, or you want the buyers, right? Or the lenders, or the appraisers, right? And you think sometimes maybe the lender is going to be the most conservative.
Yeah, so we're at the end of the day, we're very separate companies and separate offices, but we share leadership, and the relationships are shared between. So a borrower who's going to Arbor Realty Trust looking for debt now has an opportunity to also be referred over to ArborCrowd looking for equity, and vice versa.
Yeah.
If someone coming to us looking for equity, we can refer over to the REIT.
Yeah, okay, excellent. So what kind of tips would you give to investors who are thinking about or do invest in commercial real estate through crowdfunding?
It's really important, like any other industry, to know who's your partner. How much legitimacy does that firm, person, individual, whatever they may be, marketing on the platform, how legitimate are they? How long have they been around? How many deals have they done? And the platform you're investing in, what is their level of detail and transparency? I always say communication really picks up and starts the relationship after the investment, not in the sales period. Because at the end of the day, we asset manage our projects, right? Are the other platforms giving that same level of asset management support, ensuring quarterly reporting is happening, the right level of distributions, and checking, really the numbers that are coming in off the property? That's an important thing. So knowing who the actual deal sponsor is and the platform is ultimately something you need to vet even more strongly than the opportunity that's being presented to you, because the opportunity may not be that crystal clear on paper.
Yeah, that's right, and the sponsor is so important. So I assume there's some crowdfunding out there that people are investing online, and they're really investing through the crowdfunding company, and then they're managed and really just they're kind of a middleman. You're really investing with the sponsor, is that right?
Yeah.
Some of them?
The whole point, right, of the industry is to eliminate the middleman. It's to give people access.
Yeah.
Now, that's gotten a little bit watered down, I should say, given that who's interpreting the information, and is it just is the crowdfunding platform just a path through, or are they doing their own diligence on the project? Are they managing it as well?
And that's kind of, if you look at it a second way, that's kind of what you guys are doing, right? You're investing in the deal and getting involved as an investor and then reselling.
So that's one of our biggest differentiators, that we underwrite the deals in our own model and applying our own proprietary analysis based on our years and years of experience. And we actually write the check. After we like a deal, we write the check for that deal before we syndicate it out to the crowd. That's really important, because if it ultimately doesn't sell, we're invested in it still.
Okay. So if I'm a sponsor and I have a deal and I come to you for crowdfunding on the sponsor side, then you're approving it. If you approve it, you're investing with me. I'm done. I've closed. I go about my project, right? And then you're dealing with the crowd.
Exactly.
Okay.
Exactly.
And then the crowd knows who they're dealing with. They're dealing with you.
They're dealing with us, and we stand behind our dollars, literally, right, for that period of time, and our selection process and our partnerships. So ultimately, that's why, two things have happened that's been really interesting that I never really thought would happen when I started the company. First, a lot of our investors work in the real estate industry. They don't have the opportunity to invest with the principals of their funds. They see, our deals. They like the product that we're putting forth. They like our history, our connection to the deal as well. And they're investing. I never thought that would happen. Other people who are, own 3-4 properties in a certain area, want to diversify their portfolio. Our platform gives them that ability. That I was never expecting to happen. And the second thing really is how many investors are coming back, not for the second time or third time, but across all our deals.
Yeah, well, that's interesting, and it makes sense that you've seen that, because fortunately here at my shop we sell large office buildings on my team, and we get to deal with the funds and the REITs and the folks. And there's a lot of employees there. They do well. They understand real estate. They know real estate, but they don't really have the time or maybe conflict to be going out and investing in these deals. So they just go online and invest. They're investing in what they know, right?
That's
and it's no conflict.
There's no conflict.
No time.
And we put together the same level of offering overview and prospectuses that they'd get anywhere else. So 30, 40 pages of diligence is done. We're there to answer the phone. It's quite easy.
Well, it must be interesting if you're talking to a new investor that's investing with you. Then the next call is from somebody like me that's been in 35 years and $6 billion in sales, and it must be a different conversation.
Very
Probably
different
easier.
conversation. Easier, but that's why we staff our calls with only people who have experience in real estate. There is no sales structure where you're coming in and speaking to an entry-level person and then it rises up. Everybody can dive into the model if they need to when they're on the phone with you, and that's an important thing.
So you guys are headquartered in New York?
We are.
And on the projects that you've done, what types of properties, what sector, and geographically, what areas?
Yeah, so we've done a lot in the Northeast, but really all over the country for the most part. We focus on multifamily, traditionally more value-add strategies. We've recently done a ground up in North Miami, which we're very excited about. And we focus on B and C class assets, I'd say, for the most part. We think multi's the bread and butter of the industry, and the types of assets that we focus on when things do turn. They're the last to get hurt when things turn.
Well, it makes sense that if you're investing other people's money, that you want to be in a safe investment. And as one developer told me, they developed a lot of commercial and mixed use and retail properties. He also had developed a lot of apartments, and he said, "You know what, Michael? I'm sell all my commercial stuff and going back to apartments, because you know what? If you start having more vacancy, you lower your rents. It fixes it. It's pretty simple, right?"
Yep. Hopefully, you're in a market where there's always someone looking to live.
Yeah, that's right. It's a simpler product type to operate. That's for sure. When you think about retail and office, you got to look at the credit of each of these tenants and what their industries and what they're doing and their leadership, how they work together, a lot more complexity. So that makes sense. Any final tips you'd leave our audience about what you expect for the future, or what they might think about crowdfunding?
I think this year is going to be a year of change. I think it's important to really focus on, like I said, who the platform is, who the sponsor is, ultimately who you're partnering with, so that when things do change, you can feel secure in your investments.
Yeah. All right. Well said. Well, thank you for being with us, Adam. Appreciate you being on the show.
Thanks for having me.
All right. And thank you for joining us around the country or around the world. Hey, please connect with us on your social media, and we appreciate you sharing the show with others and your comments. Please connect with us we're on Facebook, we're on LinkedIn, we're on Twitter, we're probably on other things I don't know about. So thank you for being with us. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com.